Well, again, happy to be here. This is exactly the same slide I put up before the last time we met because I love these cartoons so much. The one on the left is the from the 1906 market crash, and so this wonderful. This is Mr. Wall Street here, and he's got his feet in Epsom salts. And he's got an ice block on his head. He's got all these medications, and he just went through the week from hell. And so, anyway, I really like. And then over on the other side, and this really sort of illustrates the cyclicality of markets and how we really need to embrace that. And on the right is actually a cartoon from the 1800s. And this is three bulls chasing this individual investor up the peak to the top. So he's being bulled up to the top. And of course, on the other side is the steep downward return back to normalcy. So anyway, these are sort of the two pictures of Wall Street. And so I love it. I could talk about this endlessly, but anyway, so here we are.
Well, that's actually perfect for where we are today. I think most of the audience probably feels like they're one or the other right now. Either they've been chased up a hill and they're about to get rugged, with this first month of January and how all the markets have rallied, or maybe they're still licking their wounds like the guy in the
Yeah,
chair from the last year's bear market.
sure, sure. Well, let me let's see here if I can make. Oh yeah, I got a pen. Good. I can draw stuff. I'm really dangerous. So anyway, uh, let's start with kind of an idea how the market could go this year.
Yeah,
Should we do that? I mean, I'm
perfect.
making this up as I go. So it's like really up to you all. I don't know if people have a way to communicate with you about stuff or questions or anything like that, but you know, it's just like surprise me. I'm I'm not ready for anything, but I'll pretend like I'm ready for anything. So anyway, so here this is a chart that I used as a working chart all of last year, and it's actually it's scary good. Anyway, it's a seasonality chart, and what I did is I took 72 years of data, the entire history that was available in the S&P, and did the seasonality of the year based on midterm election years. So these are the midterm years when they have the House and Senate races and so on, and it's between the two presidential. And so these are only the midterm election years. And what I did is I did the seasonality, and then this red translucent chart on top is what actually happened in 2022. So you see here that the first part of the year is pretty weak. And in fact, the seasonality was weak. You get a peak at the end of March, end of the quarter, but this peak that came in seasonality straddled mid-March to mid-April. So it kind of like the top came in between at the end of the quarter, but with two peaks. And so then down, 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 and a very sharp low into the end of the second quarter. And in fact, only about 2 weeks earlier, the S&P made a low, and then you had a low at the end of the quarter, and then a rally, and we had that pretty good swing rally
Hmm.
into the August peak, followed by another big drop into the end of the third quarter. So tell me the institutions aren't the tail wagging the dog here. The institutions are what drive these markets up and down, and to me, it's the evidence is the end of the quarters and how you have all these highs and lows that nest on these. So here the seasonality shows this too. And I've actually taken seasonality and this quarter end effect back as far as I could get data, which was the mid 1800s. And so now you can see this rally from October, and we actually had strength in the seasonality into the end of the year. Was not the case in December of 22, and I think that was because the throughout the whole year, the mega growth stocks, the ones we know that are the really huge companies, the Apples, the Googles, the Facebook Metas, and Netflix, Nvidia, all those which dominated these indexes, also dominated the S&P 500. And so these stocks were getting, they, the institutions aren't out of them. They just realized they owned way too much of them.
Hmm.
And they basically were liquidating these stocks, reducing their holdings, continuing to hold them, but reducing them. And that's what gave us the quarter end effect, and also the downward bias to the market. And this was the quarter end selling of mega caps, quarter end selling of mega caps in both these areas here. Oh, well, did I get my pen? Yeah, my pen back. Okay. So now here and here and even here. And so this is what gave us that December weakness, because they were selling into the end of the year. But see, here's something that's really important to us. You know, Wyckoffans call themselves tape readers. And so we are, as tape readers, the thing that's so unique about this December event was that it was higher
Mm-hmm.
than the October event, the June event, the March event, which means that they were exhausted. The selling was exhausted because they couldn't get it to new lows. They've sold all they were going to sell, and they did it throughout the year. Okay, so, but then look what happened. We get into the new year and we have a really good rally in January. All right, let me explain this chart. This chart is the annual pre-election year seasonality, and it goes back 72 years, 73 years, pre-election years only, which is what we're in. And note that the month of January is a very good month. February is kind of a flat month, and actually is somewhat down into the second half of the month from the high to the low, kind of what we've had here. And then we have a good March and a good April. The rest of the year is pretty ho-hum, as you can see. And then December gets a little upward bias to it. And so the best part of the year, according to the seasonality, is through the end of April. And so let's see, I don't have this up to date through the end of February, but we all know what happened in February. We had a really good January. February has been kind of weak. And so anyway, I sort of see that as being the kind of a roadmap. Here's another roadmap. And this is seasonality in the form of this decennial pattern. And this is an indicator that is so fascinating, because what they do is they sum up all the 0 years. And this is back to 1897 through 2015. Doesn't look appreciably different with the most recent data. And so 0 years, all the 1 years, all the 2 years, and so on. Well, so what is the decade generally, or what does it tend to look like? And so the 0 year here is a down year, the 1 year is a down year, and the 2 year is the low. Well, what did we get at the end of the third quarter? We got a low. Now, we didn't get the final peak until the end of the 1 year, and I think it was because of all of the liquidity pumped into the system in the 0 year because of COVID. And so that sort of gave us a little upward bias in the 1 year. Top was made, and then down, down, down into the end of the third quarter. But you get your lowest low in the second year. Well, interesting. I wonder if that can happen in 2022. We just saw the lowest low. Right now, well, let's remember back to looking at the seasonality chart we just looked at, and look at the third year. Third year is generally up, with the best part of the year in the first half or third, which takes us through into April, May. And then you have this sideways action into the end of the third year, which is kind of what the seasonality, the pre-election year seasonality looks like. And then you have election year, and then look at the fifth, the sixth, and the seventh year. And by the way, most of you won't really remember this. You've read about it, but this was the 87 crash that
Mm.
occurred right in here. And look at that. I mean, it was just that is, and I was a portfolio manager for that, so it's singed into my memory.
Yeah.
But anyway, anyway, so but that's really interesting because could it be that we've seen the lowest low for the decade in the second year?
Woo.
I don't know. I don't know, but so far we seem to be kind of following the playbook. And now we have this great first third of the 23 year trying to follow. So look, you get January strength, then you get a pause. Well, we've had weakness in February, and then you start to turn back up and you have a rally into, say, April, May. So kind of interesting. So anyway, that might be a way for us to think, and we have to, as Wyckoffians, we have to confirm all this with tape reading. We let the tape tell us. We let the market point the way for us. So anyway, with that, Jack, comments, thoughts?
Yeah, yeah. Could you go back to the slide before this? Because I want to show you something on my end.
Sure.
That would be pretty interesting.
Oh no, wait a minute, I got to do this differently.
It's like sending you
This
forward.
one, this one,
Yes.
or the
So
prior.
here's what's interesting about all this. Let me. Okay. So you're gonna see it switch to my charts. Now here's
I
what's
see it.
very interesting. I'm gonna kind of bring this back to Bitcoin real quick. Um, let me zoom out. Bitcoin tends to behave in these with respect to these halvings. These halvings seem to dominate when we actually have bull runs. And now the halvings are basically the number of Bitcoin that comes out think of it as like every day. It's like the supply that reaches the market every day. It's cut in half. So you could tell with each of these lines, each of the halvings are marked by these orange lines. Okay. So Bitcoin specifically, as we have a halving, we typically have a bull market, having bull market, having bull market, which is in there. And then, so the obvious question is, okay, well, when is the next halving, and will we perhaps have another bull market? Well, here's what's also interesting. I'm a big believer in pivots. I've been watching the yearly pivots for a while, and look how that behaved leading into the pre-halving year, which was this last time. This is 2018 going into 2019. We make our bear market low. We rally to the first pivot. We spend a little bit of time there. These are weekly candles, so we spent a week-ish there, and then went on to the R1, the first resistance. Well, look what we've done here currently. It's very, very similar. We've made a market low in the months leading into the pre-halving year. We immediately rallied up to the pivot. Now we haven't broken up and above it, but who's to say we don't next week or the week after? And this to me would be very interesting if, just like you said, most of the markets rally up to some level. I'm kind of arbitrarily picking this R1, and it could be any number of places, right? But if Bitcoin takes it up to these levels through, say, April, May, and then across the board, we have this sell in May and walk away, or at least flat sideways, and give the market a bit of opportunity to accumulate leading into the next halving. Now, why am I talking about Bitcoin and all this? It's because to me, this is another way of seeing the risk appetite of the market as a whole. So let's say that we could draw some argument that oftentimes when Bitcoin has a strong period of upward movement, we also see Tesla, we also see Nvidia, we also see AMD, we see all these pseudo related tech stocks tend to move with it. Now the percentages seem to be different each time, but to me that is worth kind of viewing Bitcoin at least as a sort of canary in the coal mine. And so this image right here, this graphic, it has been in the back of my head as you've gone through and as you will continue to go through your slides, because I can't help but have this kind of bull bias, at least for the next few months, based on what we've seen, based on the work we put in, a 6 to 7 month falling wedge breaking to the upside, for Bitcoin. And then at the same time, the S&P breaking its downtrend, all that kind of stuff. So back to you, but I wanted you to put your eyes on that and get
Yeah.
your thoughts on it.
So kind of what I'm hearing from you too is that there's sort of a form of seasonality in that. It's a seasonality that's based on these events, but very, very important. And then the other thing, because my understanding is Bitcoin often leads the stock market. And so if if Bitcoin leads the stock market and it's showing this great lift off of its possible accumulation lows, then it's showing that the appetite for, as you say, for speculation is starting to come back into the market, and it's infectious. You're
Right.
saying it's infected. And in fact, before, I actually, was, I'm a pre-Bitcoin person. And so pre-Bitcoin, one of the places that really, once the semiconductors and the tech names started to catch a bid, that often was very good for the whole market.
Yes. Yes, and it's the same
And
concept. Right.
same concept. And so maybe they all do that now. Maybe it starts with Bitcoin, then it goes, because one thing we know about the end of the year is that many of the semiconductors names started to really act well. And so that's um, really, I think, an indication of what you're talking about. As a matter of fact,
Yeah, I think everyone's wondering, what are your thoughts on traditional markets and Nasdaq, S
sure,
and
sure.
P, any of that kind of stuff?
Well, I have to show you this because I updated them just for us
Ooh,
tonight.
yeah, yeah.
And so I wanted to I put in the work, so I've got to grind through it. I'm
I'm
just
mute. I'm
kidding.
gonna. I have muted myself. I've like removed me, my image, everything, so everyone can see this really clearly.
So anyway, what we have here is just this is a three box. So three boxes, maybe akin to, it's not exactly, but akin to a weekly chart and in point and figure. And then the box size is based on ATR. But what I tend to do is I tend to check the ATR and then I round up or down to a number that is easier to work with. And so it's close to an ATR for scaling. And so what we have here, here's the distributional top. It's beautiful. So this is the really the very big count, this count here. And I normally don't start with big counts. I start conservative and then I mark the bigger count, but I always keep it sort of in pencil. And then here, you can see broke down, showed a sign of weakness, rallied up into what we call the ice, which is the underside of prior support, now resistance. Look at the series of lower highs. These are the X's, the attempts to rally. Each one of them is to a lower level. And then just this outright collapse out of the structure, which tells you that everything that preceded it up here was distribution. And so now we have a series of redistributions. Here, I just took this area across and counted down and took us to 27,000, which this low here missed it by a box. And of course, it was just a stopping point, but it was on this trend channel. Trend channel's drawn off this peak, and then I took the parallel, the off this low here, very important low. And you can see often when you get to the end of a down move, you will throw under this area. This is a beautiful chart for a lot of reasons. And one of them is throws under, oversold, attempts to uh, come back in, tests this low one more time, goes back down to the bottom of the channel, and this is called the oversold line in the channel, and then tests it and then turns back up in. And I have a better close-up look at this chart in a sec. But here's a redistribution chart here. Now notice that now this is the way I typically would count something like this, is I take from the high where the downtrend begins, and then I count over to the high where the trading range or the redistribution structure starts. So here to here, 13 columns times 3 times 750. And then I take this count, and this count takes us down 18,750 to 16,5. Well, look, it confirms the distribution count. And so we call this a stepping stone redistribution count. And when they meet, that often represents an important sort of like it's a uh, double indicator. And look at how it just stops this decline after a really big leg down and stops it in an oversold condition on a point and figure count, and then turns back up in that and builds a cause. So now we have a cause build here, which you just illustrated in your analysis. And this count here counts up 49,500 to 51,750. And I took it from the low where it rallied up to the resistance area, and then I counted it over to where sort of the trading range began. This count may grow bigger if it can like maybe pop out of here and then back up one more time. It may become a bigger count, but for now, this gives us a definitely a causation for a more important rally. And look where it goes. It goes right up to where this resistance area is. And so I asked this question today, showed this to a few people, and I said, what if it can rally up to here, a la your analysis, rallies up to here, and then has some kind of a retracement of sorts, which is
Mm-hmm.
typical,
Mm-hmm.
and this whole thing becomes a count.
So
I
I'll tell
mean,
you
this
something else that's interesting that correlates with all this stuff is remember I was talking about pivots. Well, each of these pre-halving years, and there's been several, price tends to come, despite whatever happens before, by the end of the year, it tends to come back to the pivot. The pivot right now is for Bitcoin is about 24,000 ish. So like you're saying, imagine a moonshot to 50,000 and then just bleeding out for the rest of the year. And imagine all the shakeouts that could occur all the way back to say 24, 25,000.
wow, right about here. So now this is just a more close up. This is a different kind of a point and figure. This is a one box reversal method. And so this is more like looking at a daily chart and smaller time periods. You're looking at the same amount of data, but you're seeing a lot more columns because it's one box reversal method. And so you would count 34 columns across here by 1 by 750. And that gives you your potential. So here I took the from the count line, we call it here, from the high, and then I also just took the midpoint, which is in italics. And look at this count also picks up where it stopped. And so that's very interesting. Here's a little swing trading count. This count up here, I didn't put it in, but it counts right into here. And this is swing trading count, picks up the peak beautifully here. And now here is what appears to me to be an accumulation structure in Bitcoin. So we have a sell-off, very sharp rally. This could be a selling climax, automatic rally. Let's see if I can draw here. Yeah. So we have selling climax, automatic rally, and then you draw resistance from the automatic rally. You draw support below the selling climax.
Mm-hmm.
You have, this is maybe like more like a shakeout, but this, I could have a whole discussion about this. Happens often where it'll get below an important support area and live there. But what's really important about this, it didn't break down. It
And
just stalled.
can I add something to that as well?
Of
So
course. Yeah.
so
Yeah.
within that little shakeout, the little half circle that you did,
Yeah.
where it dropped down to say 15,000. So that is during the whole FTX debacle, where it was revealed that one of the largest exchanges in the world was literally fraud, like in the traditional sense, not in the crypto is a fraud, quote unquote sense, but actual old school, take your money and not give you credit in the right way kind of way. And so once this was revealed and everything kind of fell apart, that that column of zeros that sent it down to 15 is and so I'm going to follow this up with the question, but that column of zeros involved some of the strongest selling pressure that the crypto world has seen ever. So if you go look at a Bitcoin chart with the volume turned on, it is god tier. It is S class. It is the strongest, one of maybe three or four individual daily candles of that size, or maybe 3 day candles of that size for the last 15 years or 14 years of Bitcoin's history. So here's my question I want to follow up with. Does point and figure take into account volume? Is that somehow worked into the equation here?
You can do volume analysis on point and figure, and what it does is it totals up all the volume in a column. And then you can also do volume by price this way. And then you can do volume, I guess, I mean, by column. It's not really by time, but and so that is very, very useful. And I put volume, especially on my stock charts. I do a lot of volume analysis on point and figure. This column here would have a huge amount of volume in it, and it would it really demonstrates that there's tremendous accumulation and attempt to get on this change of character rally that's taking it up and out of the structure. And so then the volume would dry up here, and then it would start to expand here. So volume can be very helpful as a confirmation tool,
Mm.
just as volume would be quite high on this declining column here and here.
These charts are wonderful, by the way. I just and I'm sure chat feels the same way. But this is great.
Yeah, well, and so let me just, I'll even a couple more things about this that's so interesting. There's a whole accumulation structure inside of this little area,
Mm.
and we know the prices are fractal, and so there's a whole the whole thing in here, and this is a swing trading count that you could blow this up and get in here and do some things to get more detail. But this is a beautiful structure, comes out of here, comes in. So this is accumulation in a very small scale. This is accumulation in the turquoise box. And then I think this whole thing, as I mentioned before, all the way over here could very well become an accumulation structure. So this all might be part of the same structure. And so the potential for higher prices is very real in here. And so it's a it's interesting. Very important resistance is right here, 24,750. And so it'll be very interesting. My preference is to see a sign of strength rally, which would be a rally that can take out very important resistance before, and then so take that out, live up here for a little while before it comes back down. And they don't have to come back down before it would come down and test this whole structure. And then it's
Test as
on its way.
support.
Yeah, exactly. So sign of strength is a very important concept or idea, and we can see that idea here.
Mm.
So here's an accumulation schematic. Look at how this mimics what we just looked at. Selling climax, and then it becomes range bound. So these phases all have important characteristics. We look for price volume relationships that occur in these areas. Well, look at here. Now we have what we call a spring here, but we just talked about how Bitcoin was able to live below this support area for a long period of time, which is right here, before it rallied. And then look at the sheer explosiveness of the rally from below the support line to resistance. And this is why I like to see a sign of strength up here, and why I'd like to see Bitcoin go a little higher before it pauses like this. So it's like a hinge. And so, and this happens a lot. It's called a backup. And it's just a pause. Volume tends to dry up, spreads narrow, becomes dull and quiet. But the sheer nature of this rally is the big tell.
Mm-hmm.
And the rally here is much better than the rally here in a number of qualitative ways, and it's much better than the rally here. So we're always comparing and contrasting rallies and reactions as you're going through these accumulation events. So this has attributes that could speak well to the current situation in Bitcoin.
I think you made a lot of people happy. Chad, how about that?
Well, but what it does is again, we're tape readers. We let the market tell us where it wants to go. So what's it got to do? It should show the ability to be able to rally above this key resistance area and then hang out up here for a period of time. That would be the most bullish thing you could ask for. If it stalls here, then you may get something like this, where you get an LPS. Maybe it goes up to here and then it comes back down like this and has a much deeper reaction before it does this kind of thing and takes off. So there's a couple ways this could happen. And right now, we are just, we're kind of on the bubble here because we have this big resistance level. And if this is a bigger accumulation and this resistance is going to come into play later, then you'd like to see it be able to stall here, get up to this level, which is a point and figure target, and then have a bigger sign of strength, a bigger backup, and a bigger move up. So we're always asking, okay, what do we expect to happen next? And that's really important. And we can see, ignore that chart. We can see that here, that these can happen many different ways, but they tend to have characteristics. Each of these phases tend to have certain characteristics. But we're always asking, okay, if we're here, what should happen next?
Right.
And then we look for the volume and the price characteristics that would confirm that. And so for the sake of our discussion, let's just go to the S&P.
Sure.
And so the S&P, this is actually through yesterday, not through the end of the day, but the 21st. And I wrote a blog on this. You can read my blogs at stockcharts.com, and it's Wyckoff Power Charting, and it's under articles. I also do a weekly video for them. But here you can see that I started to label these characteristics as we were building this potential accumulation structure. And I'm always asking the question, well, how do these rallies and reactions compare to each other? Well, one of the most important things was this rally to the May-June high. And then look what happened after that. Huge amount of supply came in. Volume really expanded. Huge volatility in this decline. I thought it had a climactic quality with gaps. And then it built a little swing trading structure here, which was very tradable. And we talked about it at the time, did point and figure work on it. Point and figure work counted right up to where it went.
Oh, wow.
And so very tradable. And then you had another one here at the green swing trading count. And this is stocks above their 50-day moving average. This is a form of breadth. And so what I look for is I look for the characteristics of non-confirmation, meaning that we got a lower low in the S&P, we got a higher low in this case, a 50-day moving average, stocks above. You can do this on the NASDAQ comp. I also do this with advanced decline indicators, advanced decline volume indicators. There's a number of ways, bullish percent. There's a number of ways to do this, and I look at all of them. And so over here, here's a big, look at how this swing trading structure appears to be bigger than this one in June. This, you look at this big, call it green shoots. This is walking uphill as you're getting lower lows and a spring in the S&P.
Mm-hmm.
And so we were in there tearing apart industry groups and stocks, finding the ones that were best up in this area right here, because we know that there are stocks that are doing this while the market is still breaking to new lows.
Mm.
We want to identify these stocks and then start to trade them for when the rally, really starts to take off. And then you get these big leaps here, here and here. And this count, this is important, this count across this green shaded area, which you can't see, but it was a point figure count, went 4,100, 4,350. And that takes us right to the area of the August high. Well, so far, and I put sign of strength with a question mark, because when I drew this chart, none of this data was in. This data wasn't in yet. But I had the count starting right here. And so it went up to the 4,200 area and stalled, which is exactly where it went here. So I didn't get the sign of strength that I was hoping for
Mm-hmm.
yet. And so now we have a market that is turning down. And so this indicator is doing a couple things. One is it's building a top and it's starting to go south. And when you have these indicators going south, it's best to let the market have its way, and because it's likely to move in that direction. Overbought, starting to turn south, the market is going with it. So this is a very interesting place, and and this is a wish, believe me. It's like, I'm not saying it's going to happen, but it really needs to stop somewhere in this area and maybe spring this low and then turn up. And if it doesn't do that and give us a sign of strength up here, then I think that we may have the potential to have a much deeper correction back into this bigger structure.
Well, I'll give you a bit of
And
hopium. The market did it fell into the 39 whatevers today, and it closed right around 4,000. Meanwhile, Bitcoin fell to the 23s. But since we've really been streaming, and maybe just shortly before, Bitcoin's back to that 24.6 level or 24.5. Last
good.
I had it pulled up. So
Yeah,
perhaps we see the market rally, if crypto is sort of front running it during the tradable hours before the S&P. Perhaps that's what we see tomorrow as well.
wonderful. Well, I want to show you one other way to look at this. The Dow, and I have this more marked up somewhere, but the Dow is very interesting to me because I've been comparing Dow 2001 to 3, which was the .com bust, to the current period where we're having the mega cap bust. And the thing that happened in the Dow at that time was that you had, and Dow's just one example of this, all the value stocks, the industrial companies, the home builders, the banks, interest rate sensitive. Now that isn't the case today, but the industrial companies and the more mainstream businesses that the company runs on, automobiles, things like that. Well, go back and look at that period, and those stocks almost didn't go down in the bear market for the .coms.
Hmm.
They withheld the bear market very, very well, those themes. Now, today, I think that we may be able to, there was huge value in a lot of these industrial and real economy stocks, while the mega cap growths were massively overvalued.
Mm-hmm.
And keep in mind, those .com stocks didn't really catch a bid for about, I don't know, 8, 9 years. I mean, it was a long winter for growth stocks. And but look what happened while the S&P, which we just looked at, look at the rally off the October low here. This rally is much, much better than the S&P rally. And I think that's because the S&P is populated. S&P is market cap, or it's capitalization weighted. The Dow Jones is not. So the Dow Jones is price weighted. And you'll have to look it up, but I've written articles about it. And here,
Interesting. Okay.
very important. Yeah, they're calculated differently. Look at the huge move in the Dow off the October low. And then when it stalled out, remember how we talked about how in December they started to really sell the mega cap names for tax reasons and portfolio reasons into the end of the year, and then the mega cap growth names just took off in January. Well, Dow did not take off. It's just been in this trading range. It's been in a hinge, higher lows here, lower highs here, and now it's kind of broken down out of that. But look, very tight range, diminishing volatility. This is acting very much like a backup, which we talked about a few minutes ago. Dull and quiet, and after somewhat of a sign of strength because it took out the August peak. The other indexes did not do that. And so I'll be very curious if the Dow can catch a bid down here around support and then be able to turn up and out of here, because I do believe that we may be looking at the current period rhyming to the early 2000s in terms of where the action's going to be. It's going to be different value groups. Probably the home builders, which have done quite well lately, may not be as good as they were back then. And there's other, but there's a lot of really good, real business, real economic companies out there, trucking, all kinds of things that are very reasonably priced and have dividends and so on. And so I'm wondering if the Dow isn't reflecting that.
So that's fascinating because for a period of time, I would chart the Dow Jones and the S&P separately, and the Dow clearly broke up well before the S&P, and I never really dug into why. I really just kind of sat on my hands and said, well, look, one of these, they have different ideas of what the market's going to do. One's going to be the winner, one's the loser. We'll wait till they kind of rhyme. But that's fascinating to think about it in terms of the S&P having the weight of the like Apple and Google and some of the big caps that were pulling it down. Interesting.
Exactly. And now here's an index that doesn't have these mega cap names in it and has a lot of really good real business companies in it. And this is the Russell 2000. And they're not really small caps, they're kind of mid caps. But the Russell 2000 always considered to be small cap with a real economy orientation. And this is a big structure going back to May, and has I think a very accumulation type characteristic where you have a selling climax at the May low, automatic rally, you draw resistance at the automatic. Look at how well this resistance
It's
here
so clean.
held.
Being tested
Yeah.
now.
And now support, you draw that on this low, and you can see that you can get below the low. Happens all the time in accumulation, but it can't stay there for long. So the very large interests are providing support here and are buying. They buy in the bottom third of an accumulation structure as much as possible. And so look at this. Then you have a local spring of the September low, turns up, tests here, and then a rally that almost gets right back to the August highs. Now it's a little bit weak locally, but it has so far not given back much of this leg up, and very little of the leg up from the September October low. So Russell also, I think, is representative of that theme. And so that I think is really uh, interesting in that analog. And then finally, I'll show you this one. This is the triple Q NASDAQ 100 triple Q ETF. And this has got really dominated by the mega caps. And here's the Dow Jones, which we just looked at. Now, this is a relative strength chart. So all I'm doing is I'm just plotting these two indicators as a ratio. So you can see triple Q to diamonds, and it's a 2-hour chart. Goes back to 2021. And this is the high for the Qs was back in November. But the high for the market didn't come in until the end of December. But look at this downtrend. This downtrend is representative of the triple Qs underperforming the Dow. So when you have a downtrend like this means the Qs, which outperform for like 11 years, look at what they're doing here in 2022. And then remember how we talked about how you get throw unders? And that's an oversold condition. Throw over in May, rallies up to the supply trend line. Oversold here, climactic, rallies back in, tries again, barely gets below the oversold line, and then rallies. Well, now the sharp rally in the market is the numerator triple Qs outperforming. And that's because of all of the washed out tax loss selling at the end of the year. And then they caught a big bid. But I'm watching this closely because I wonder if the Dow could start to outperform again. And if it does, this line will drop again. Triple Qs have been massively underperforming in 2022. And so this is interesting though, because maybe the growth stocks are coming back because that's a pretty good rally in January. But anyway, I just watch that really closely. And so this is really how you can see where the leadership and the laggardship is by looking at that.
That's great. We do that a lot in the crypto side. We'll compare whatever Ethereum or Litecoin versus Bitcoin,
Sure.
and it's a very similar thing. Okay, what's outperforming right now? Because in times of fear, the Bitcoin will outperform literally everything, and in times of more risk on, higher risk appetite, then you'll see the altcoins, the other coins tend to outperform Bitcoin. So that's another way of looking at things as well. But this is fascinating. This is great.
Well, it's let's see. Here's crude oil. So this was a study that I had done. Point figure works really well on crude oil. I've been doing it forever, and it's amazing how well it works. This chart was published in January of 21, and at that time, I had made the case that we had completed an accumulation structure. And note this, here's our distribution. Look how much this looks like the distribution structure we counted in Bitcoin, and has very similar, and broke down, rallied up into the ice, then really fell. Well, it counted down from a high of 76 down to $7.60 down to -$3. And I don't know if you
Yeah,
remember this,
I
but
do.
crude oil went negative. Actual crude oil went negative. And so the point figure chart picked that up, which is, and
Unbelievable.
totally the minimum account objective at $7.60, it hit it perfectly. So then I took this count and of an accumulation structure, came up and out of here. This is 5320 at the time, and it counted up to 8512 to 11248. And here is a chart. This is March of 22, but here's the upward stride, and this is a daily chart, so it doesn't pick up a lot of what, just sort of the uptrend. And look at how it threw over the top of this channel, totally changed the side and accelerated into a buying climax. Now, let's go to, let's see here, next chart. Oh, here we go. Okay, so this is what happened. Here's what I did is I put the point figure counts. Here's 112 here, and not 92. I think I updated this count and I actually snugged it up to 92. So that's how I got the 92. But anyway, because I do that sometimes. I'll look at it later and I go, oh, I got to add a column or two columns.
Mm.
So, but anyway, so ultimately 92 became my count. And so look at what happened. It rallied up through the 112 count, which I didn't change. And it went through the 112 by 3 days into a buying climax. And then a huge automatic reaction, which is what we look for. We draw resistance on the high of the buying climax, support on the low of the automatic reaction. And look at how it tempered this secondary test, pulled back, rallied into an upthrust, and then it failed. Look at how it's trying to hold the upper channel line. And then it fails back into the channel and then just marches right down to oversold and goes down out of oversold, touches it twice from underneath. And this is where we are as of yesterday.
And does that
And
distribution top, does that have a target of a like a low target?
I've done some targets. I haven't taken the extent, the entire amount of it. I think I just did like this area right here, and I can't even tell you right now. I've got them in my files, but
That's okay.
yeah, I don't have it. But um, what now? What's really interesting is we're having a lot of discussions about whether this could be accumulation here,
Mm.
and so uh, no conclusions yet, but and so, but anyway, so there we are. That's just a look at, and then here, interesting thing that happened is this is the XLE, which is actually the energy stocks.
Mm.
And I'm just showing, this is the count I took at the time, the end of 2020. I did this accumulation count here, counted 79 to 95. This is all, really all the big producers. And it went right into this area right here. And so we fulfilled this count. And now, as we see here in the last few days, we're starting to see more outright weakness from the energy stocks. And then on the right, the big dog in that space is Exxon. So here's the Exxon count. And the Exxon count goes 116, 128. And here we are.
Right. And so this
So
is funny. And I'm sure you haven't seen this, but one of the few bearish traditional market charts that I've put out is on Exxon and what was the other? Chevron, I think was the other, but Exxon was the big
yeah,
one. I've
yeah.
opened one option trade in the last 2 years, and it was a put on Exxon.
Well, and me, I tend to be, I'm a campaign trader. So I'm looking for ideas that I can get on and identify the trends early and participate in those trends. And so that's what I'm always doing. That's what I look for. Even though I do a lot of intraday work and I love to do the intraday work and so on. But this, this has been a huge campaign for me is the energy sector. And guess when else the energy sector was massively undervalued and went up and up and up for years after that was 2000.
Oh,
They
which
were like so cheap. They were
supporting,
unloved.
yeah,
Yeah.
and supporting your earlier comment that it perhaps we are behaving in today's markets, perhaps we're behaving similar to the early 2000s.
Yes. And so here, um, just last thing I'll show you, and then I'll sign off. But
Okay.
um, here is the 2 year. This was in January of 23, and I did a distribution count. Now, this count was, I took too much. I took too big of an account. The count, I think, probably should have been to here. And then TLT, you'll notice I didn't take the count all the way over to here or here. I took it to where the buying climax appeared to start in the automatic reaction. Look at this, $152 for 20 plus year US Treasury bonds. And so I took this count across this area, and it counted at the time, and people thought it, they wanted to commit me. And I said, I've got a count that goes 101 to 91. And
Nailed it.
and then I had a redistribution count that went to 93. So it confirmed this. And this is what subsequently happened. Now this chart isn't up to date, but your count is good when you don't just stall down here, but you have a really sharp counter trend reaction.
Right.
That's the confirmation that this was a really good count. And so that was here is subsequently, look what I did is I took this count. I took a slightly smaller count here, and this count went 415, 390. And this is in fact what we did. We went to 410. So we got into the range, tested it, and then look at this sharp rally.
Mm.
So I think we're range bound in here for interest rates. Best case is that we're range bound. And yeah, I don't think rates are going to change much from this area for a while. And I think that, the Fed is going to just keep these rates elevated roughly in the range. They're going to raise a little more, most
Yeah.
likely, but I like to look at the charts and let the charts confirm that to me. And
Higher for
so
longer. Wasn't that the thing?
higher for longer.
Yeah.
Yes, exactly right. So I can answer questions or whatever in the few minutes that we have left, and happy to try to help in any way. And just keep in mind that there's a lot of good content at Wyckoff Analytics. This is my teaching partner at Golden Gate University. This is his website, Roman Bogomazov, brilliant Wyckofian. And we used to teach Wyckoff together. He was one of my students and then became, he's a better teacher than me. And he's really good. And then my show is on Fridays. It's not behind a paywall at 1:30, and you can watch it on demand with replays anytime you want. So join me sometime. But anyway, go check out Wyckoff Analytics, and there's a lot of good stuff on crypto there also. So
Awesome. Well,
yeah.
anytime I see you put out a video, I try to retweet it or spread the word because
Oh,
you are
you're
on a
awesome.
I can count on one hand the analysts that I actually watch their content and take serious. And you are one of the few. So, this is good stuff. And I think anybody who's watching should definitely give you a follow. Down below me is the Twitter to at RD Wyckoff. And then also be sure to follow on YouTube. What's your YouTube? The handle?
Well, the YouTube is I'm in the Stock Charts TV
Oh, that's right.
channel,
That's why I couldn't think of it because it's not
but
like
all you
your
got to do
name.
is go to Stock Charts TV or stockcharts.com where you can make these point figure charts without a subscription. So you can make these, you just have to save them in PowerPoint or something.
Mm,
But it's very useful. And go there, and at the top of Stock Charts TV, just go to shows. My show is Power Charting,
okay.
and then you can see how to get into YouTube.
Awesome. Well, man, this has been great, and I can't thank you enough for being here. We'll have to get you on and really like dive into some stuff. One thing I think would be fun is maybe before the next time you come on, I'll throw you some kind of random things, just like we were talking about Red Robin,
Yeah,
beforehand, just some stuff like
love to.
that. And just see kind of what you come up with, and the chat will already kind of know my take, my analysis, and we'll just like you and
Sure.
I did with Bitcoin here, and we kind of overlay and see how they fit, and I think that would be fantastic.
Well, I
But
love to, and I said this earlier, we were talking a little bit before, but uh, I love it when our community, and we are a community, and there's not really that many of us. And I love it because we all have eyeballs on really good ideas. There's so many really good analysts, really good traders in our community, and they've got eyeballs on interesting things. And and I love to share these things. I love to share these ideas. I love for to get, you know, what you're looking at, and I love what you're looking at. It's fantastic. And we can just, look at these things and share them back and forth. I can bring ideas and so on. The other thing we can do is I'm happy to do little workshops on Wyckoff, aspects of Wyckoff. So, we could do like a, a primer on reaccumulation or something, because there's so many unique, powerful things about that or anything, all of it. So,
I think that's great. Just like redistribution would have been fantastic. And I see you put a good slide up. I'm going to switch it back. Just like redistribution would have been such a powerful thing to see and wake up to during 2022, because that kind of
oh,
got everybody. I think reaccumulation is probably in our near future, and as you said, this is probably a great
yes,
schematic for everyone to get used to.
you're gonna you're gonna see these characteristics in Bitcoin.
Mm-hmm.
Hopefully, if there's a fresh new uptrend that's just emerging, you're going to get a series of, you'll get 4, 5, 6 of these in a good uptrend.
You
In
know,
that Exxon chart, there was like a couple of beauties in there.
correct. And you had that. What was the Dow Jones? What was it was just a subsection of the Dow Jones, but it's the one you put up where we seem to be breaking at sort of uptrends ever so slightly. And you mentioned if we can find support and then rally, I
Yeah.
believe that would be a really nice a study case for
Oh,
reaccumulation rather.
I've actually done counts on that little backup in the
Mm-hmm.
Dow, and it's amazing how these little structures inside of bigger structures can light the way about where and how an index or a stock or whatever is going to get where it's going. It's gonna go here, it's gonna stop here, it's gonna do this. It's like, these stocks have got this remarkable ability to communicate what their intentions are. So,
Fantastic. Well, I love this stuff. And chat can back me up on this, mainly because I did not think the bottom was in. I'm not someone who's just, glass is half full and we're going to go up and it's moon time. $15,000 Bitcoin. I was not saying the bottom was in, but I was saying this kind of volume and making a very slight low is a big deal, and we need to pay attention to what comes next. And so that sort of thing, and then seeing what subsequently happened, what ended up happening. That really got my attention. That's what I love about charts is it doesn't matter what I think might happen. It matters what the charts are saying is happening right now. Just like your point and
well,
figure charts.
and when we look at the structure of, say, an accumulation, one of the things we worked really hard on at Golden Gate was to be able to to draw the narrative of what we call the composite operator and what they're doing.
Mm-hmm.
There are very big operators in crypto, and those people, they're really good at what they do, and they are, that when we got that dip where it went to a new low, like you said on the STX fiasco, is that they use bad news to where people are giving up. They use that to accumulate shares.
Mm-hmm.
And this happens in stocks, it happens in commodities, it happens in everything. And this is just what they have to do. Best practices are when they have to put a lot of money to work, they're going into the market and they're figuring out where the liquidity is. If they want to sell, they want to know where the buyers are going to be at the top. If they want to buy, they're going to figure out where holders are going to be selling. And typically it's on weakness.
Mm-hmm.
And so they don't do this because they're trying to manipulate the market. They're doing it because this is human nature to do the things that happen. We've all sold the lows, when we shouldn't have. And that we have to invert our thinking. And this is what Wyckoff taught us to do. Wyckoff taught us to be able to think with the large interests to accumulate when they're accumulating, to sell when they're selling. But we have an advantage that the large interests don't have, and that is that we don't need a whole accumulation structure to be able to build our position.
Right.
We can get our position on as a stock or a market is finishing its final testing and getting ready to launch into a near vertical rise. And it could be off the very low of the market where a spring's happening. But we saw 2 or 3 really good examples of that tonight, where we saw this incredible lift off, and the near vertical ascent is an indication in itself that the accumulation has taken place prior. And we want to really be aware of that. And also, we have to steel ourselves for the idea that we're going to be buying in the emergence of a fast moving market. And that's something that people don't like to do. It's like all of a sudden when a market has a big up day off of a key test of an important spring low, and you go, this really is a sign that this market is going to try to ascend up to the top of the accumulation structure, or is going to jump out of the accumulation structure. We have to train ourselves to be able to act on these things and to set stops and be good risk managers.
Well,
So,
and it's like I was talking to a buddy before, like earlier today. Most of the market has been trained to sell the rally for the last year. They've been rewarded for it, and anybody open shorts, you've just been making money hand over fist all through 2022 until the end, until that change of character, until these downtrends are being broken. And now it's kind of the opposite. And like you said, a lot of people just aren't really sure. And even though there's all these signs saying, hey, the bottom might be in, just might be. Let's just kind of underline might be. Um, there's a huge section of people, a subsection of group who cannot mentally fathom that. They're like, no, 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 we are going to make new lows. Well, how do you know that? Person saying that, I don't know. It's just a feeling, and I think we're going to keep going lower. So it's a very interesting time, right? Because that's oftentimes that is what kind of the sentiment is during an uptrend, or at least the early emergence of an uptrend. So I'm with you. It's very interesting time. And it's very confusing for a lot of people. And it always is when the market seems to rotate, whether it's tops or bottoms, over a macro time frame.
this last thought, but
Sure.
I'm at 40 years in this business, 40 years as a Wyckoffian, and the market wants to tell us, the market speaks a language, and our responsibility is to listen to that language. And once we learn the language, we want to just hear what the market's telling us. The Wall Street and the Wall Street press doesn't speak that language. They may speak the opposite language. They may speak something that totally confusing. So we want to just focus on the language of the market, and the market will tell us reliably where it wants to go. And we can learn that language and participate in it. We're not going to be 100% successful. We have to be just superior risk managers. But that's what Richard D. Wyckoff taught us 100 years ago, was be a good tape reader. Learn how to be in the moment and learn what the market is saying to us. And he was one of the absolute best. He was so good at it. And Ramon actually teaches courses, two semesters of courses that were basically from the GTU program at WyckoffAnalytics that teaches the language of the market via the Wyckoff method. So I don't know, some people may be interested, some aren't, but for an introduction to it, you can read my blogs, and that's all free. So anyway, with that, that's my thought. My battle cry always is reasons are optional. So
I like
just,
that.
yeah, reasons are optional.
That's awesome. Well,
All right,
look,
brother.
thank you for coming. Look, we'll get you on again soon. Sorry for keeping you a bit longer than you wanted, but man, it sure
We
was
knew that
fun.
was going to happen. We knew it. And thank you all for being here and for listening to me rattle on for a while. But this is the most fun that a person can have.
I
Just
agree. That's why I
talking
do
about
it.
the markets.
That's why I do it. I'm with you. This is a blast.
All
Well,
right,
thank you,
everyone.
Bruce. You have a good
Thank
night,
you.
okay?
I'm not trying to be perma bulljack, perma bearjack, just charts jack. Just whatever the charts are telling you, that is all I'm good for. That's all I'm here for. And nothing else. I'm not your hype man. You know, I'm not your bear guy telling you to sell.